This is insane. Imagine investing $50,000 and turning it into hundreds of millions of dollars. That is not a dream. That just happened because Deep Value, aka Deep Value, aka Roaring Kitty, is back at it again, and he just played the Uno reverse card and broke the stock market once again. And I mean broke it because I tried to buy GameStop last night and Robinhood didn't let me. Now, Roaring Kitty is the Chad who likes GameStop so much that as of yesterday, he had a position of roughly $180 million worth of GameStop, made up of $115 million in shares and $65 million in call options. Now, as of yesterday, he was allegedly the 5th biggest shareholder of GameStop in the world. As of this morning, he became the 3rd biggest, and within this week, he could become the single biggest shareholder of GameStop in the world and possibly become a billionaire, which is pretty crazy, and I don't think we've ever seen anything like this. And he's also making one big bet. His bet is that exactly 18 days from now, if GameStop's price is more than $21 a share, he'll end up making a lot of money, because at that point, he'll be able to exercise his contracts and buy GameStop at $21 a share, regardless of how much higher GameStop's price might be 18 days from now. The Superstonk community and Twitter are exploding right now, and we're witnessing history unfold. I feel like Roaring Kitty is just Goku at this point. He's about to cast the dopest spirit bomb the world has ever seen and send the short sellers back to the Shadow Realm. Now, most of this video I've said just a couple weeks ago, so I'm going to repeat a lot of it, but this bears repeating once again, featuring your favorite characters like Roaring Kitty and Robinhood. So with that said, let me rewind to how we got here and explain exactly what's going on.
Is the craziest I think I've ever seen.
When I see meme stock mania taking over again, led by GameStop and AMC, I need to remind you that this is irrational. There's no way these stocks should reach such elevated levels on their own.
Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for GameStop Take 2. So let's rewind it all the way back to the beginning, because all of this started in 2020 with a company called GameStop, a brick and mortar video game retailer which was struggling as the world became more digital. And as more people downloaded their games online, GameStop's sales started to go down. That made them a huge target for hedge funds to short the stock. Now, shorting is when investors borrow the stocks of a company they feel will go down in value. So then they sell the stocks and then buy them back at a lower price and pocket the difference. And several major hedge funds, including Melvin Capital and Citadel, saw an opportunity to make money by betting against GameStop. They started to short the stock like crazy, thinking the stock price, of course, would go down. Except there was a huge problem. The amount of shares they borrowed to short the stock was way more than what's called the entire float, meaning all the stocks that were available to trade in the first place, which doesn't even make any sense. And someone noticed. That someone was Keith Gill, a modern day hero to us all.
Yo, what up everybody? Roaring Kitty here. I'm gonna pick a stock and talk about why I think it's interesting, and that stock is GameStop.
I love this guy.
Known by names like Roaring Kitty and Deep Value, he started to share his thesis on GameStop, and his belief was that the stock was undervalued and the market wasn't recognizing GameStop's potential, specifically under new strategic direction and leadership under Ryan Cohen. So Gill's detailed analysis caught the attention of a massive community called Wall Street Bets, which is a subsection of Reddit where they make millionaires out of billionaires. So the retail investors got together not only because they saw it as an opportunity to maybe make some money, but because it represented the fight against hedge funds and Wall Street itself. So everyone started to buy GameStop, and the stock price skyrocketed, which eventually led to a massive short squeeze. And this happens when a stock that's heavily shorted starts to increase in price, which leads to short sellers needing to buy back their shares to cover their positions, driving the price even higher. And in January 2021, GameStop's price went up from around $20 a share to an all-time high of nearly $500 in a short amount of time. And some people come to refer to this event as the MOAS, or the mother of all short squeezes. And that brings me to today. This morning, before the stock market opened, the stock was up roughly 100%. And that all happened because Roaring Kitty revealed that he's the whale that likes the stock. Now, at $42 a share, which was the market open, that means he was up roughly $300 million on his position, which is just insane when you remember the fact that he started this whole thing with about $50,000. In fact, there's a small chance that he could end up becoming a billionaire this week, because for every dollar that GameStop goes up in price, he makes $12 million. Of course, the same is true in reverse, and he could lose his entire fortune at the rate of $12 million for every single dollar that is lost. But that's what you call volatility. And the price became so volatile that last night, brokers like Robinhood stopped allowing people to buy the stock. Now, I have no idea why that happened, but my theory is that at least last night, there wasn't a lot of liquidity and shares for sale at that moment, so the orders were not filled. Now, I am not endorsing anyone to buy the stock because it's extremely risky, but I wouldn't be surprised if some people made a lot of money. I'm just excited to see what this situation will reveal, because the last time this happened, the stock price collapsed spectacularly. But along the way, we learned a lot about how the financial industry actually works. Because not only did it lead to movies like Dumb Money, which chronicled the whole event, but it also caused huge losses for hedge funds like Melvin Capital and Citadel, which required a $2.75 billion bailout. It also led to scrutiny of practices such as PFOF, which is payment for order flow.
If you get an order from Fidelity and you get an order from Robinhood, and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer?
The execution quality that we can provide, as measured in terms of price improvement.
And don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question.
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate.
And it led to conversations and questions that we never asked before on such a public scale, like, should we allow market manipulation by hedge funds? And if we do, why can't retail investors get together to do the same? Because if retail can't and it's not allowed, then someone's already guilty of market manipulation way before retail ever did it. And should we allow relationships that lead to conflicts of interest, like the ones that exist between brokers and market makers, which leads to them profiting off their customers? Do we really get the best prices on the stocks we buy, and do they have our best interests at heart? Should payment for order flow even be allowed at all if Europe has already banned it completely? Should brokers be allowed to stop the buying and selling of securities if it makes them money? These are all really good questions that we still don't have the answers to.
Why did Robinhood restrict the buying but not the selling of GameStop?
The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. Buying securities increases our collateral requirements. Selling does not. Moreover, preventing customers from selling is a very difficult and painful experience where customers are unable to access their money. So we don't want to impose that type of experience on our customers unless we have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
But mostly what GameStop did is it exposed the sketchy practices of hedge funds, like their use of dark pools, synthetic shares, and other practices most people had no idea was happening behind closed doors. This is all alleged. The media says it's over, it's a sucker's rally, and the stock is never coming back. Now, of course, some people in the traditional media say that they know exactly what will happen to the stock. Jim Cramer is, of course, warning people against meme stock mania. He says the stock price is way too high, and just like I said a couple of weeks ago, that means the stock is probably going higher, and I was right, because short sellers are once again losing billions. And once again, one of the major reasons why the stock price went up again is because short sellers were betting against the stock and they were short selling it.
Investors who had lost big on GameStop were looking for someone to blame, and Roaring Kitty was starting to look suspicious.
Shut up!
And this entire week, he went on a tirade of posting dozens of hilarious and not so subtle hints about who knows what. I don't know what he's referring to. Could be anything. Maybe he really likes memes and movies. Allegedly, of course. Now, believe it or not, there's actually legitimate reasons behind why the stock is going up this week, and it has nothing to do with Roaring Kitty. The major reason why the stock is going up is because short sellers are shorting the stock again. For example, the average short interest of any given stock is usually 10% or so on the lower end and 20% on the higher end. Now, that means investors are expecting the price to go down at 20%, and GameStop's short interest this week peaked in the mid 20% mark. Now, to be fair, that's nowhere near the peak it was in 2021, but over 20% short interest is still relatively high. It's high enough to get the attention of retail investors to buy the stock that especially they believe is so symbolic, which can push the price just high enough for short sellers to be squeezed and to be forced to buy back shares at a higher price, causing them to lose their money and causing the price to go even higher. That's why GameStop is going up this week. But while all of this is happening, the reason people are so upset is because shares of GameStop and AMC were halted over 30 times this week. And that's raising a lot of questions over who this is really trying to protect.
Why is it halted? I said it when we did this. They don't halt you when you're losing. I've lost so much money and I'm begging, hey, Ken Griffin, hey, Vlad, halt it when I'm losing. They only halt it when you're winning. That's why the game is rigged.
Now, what's interesting to me is that once again, we're seeing the same old tricks. The SEC and of course the media are trying to protect retail investors from the stock, and they're like, guys, slow down. You don't have to cross the finish line. We're just trying to protect you from yourself.
Stop it.
Now, I'm generally not someone who believes in conspiracies because I think everything has a logical explanation for it. So I wanted to help explain once again what is a stock halt and when they've happened in the past. And a stock halt is when they stop allowing people to buy specific stocks, and it's usually triggered when there's a massive spike in price. And it can happen when a stock goes up or when it goes down. I found that stocks that went up way too fast have been halted in the past. And this actually happened to Tesla in 2013, Moderna in 2020, Zoom, Tilray, and Beyond Meat. And when a stock loses a lot of money very quickly, it can also happen. Like it happened to Facebook in 2018, Twitter in 2016, and it can even happen to the entire market when circuit breakers that are designed to stop the trading of securities go off to prevent a market crash. And the reason why this happens is to prevent panic buying and panic selling. And I found out it's not a very common thing that happens, but it has happened in the past. Still, I have a problem with it because halts are designed to protect the average retail investors. And yet somehow, this feels a little one-sided because the only thing that's being protected in this case are retail investors from making money. Volatility alone isn't a good enough reason to halt the trades because that's how high-frequency trading firms make their money. Based on volatility, that's how they make a profit. So by halting trades, especially when the stock is going up and it's making people money, just feels extremely one-sided. Shouldn't we allow everyone to make money from the stock market equally? Again, I'm not a theory guy, I don't believe in narratives, but I'm kind of struggling to come up with a solid explanation here, especially when I see interviews that accuse the retail people of market manipulation.
But is this something that we should be tolerating in our markets? You know, whether it's legal or illegal, I don't think so. And that's why I say, why doesn't it, you know,
but look, what does that mean not to tolerate? So the idea, I would think, is you look at this more in the context of market manipulation, right? And the question is, are you allowed to manipulate the market? People, by the way, publish things all the time and they say, hey, I like this stock, and they, you know, hope that other folks follow them. Is that market manipulation?
Generally not.
Maybe not. So what is the distinction in your mind as somebody who ran this department and who's looking at and cares about the integrity of these markets?
In that interview, the former SEC chairman had no good answer to that question. There is no distinction between what's happening here and the countless publications we see online and the TV shows that people watch every single day that flat out endorse the buying and selling of a stock. And somehow, some random guy tweeting some random memes on the internet is market manipulation and that, quote, people shouldn't tolerate it anymore. That makes no sense to me. Please help me understand who this is actually trying to protect. Now, most of what I read online, unfortunately, is that Gil and the Finfluencers are pumping the stock again. And then I see how GameStop is a failing company that misses earnings and it has no future, which can be argued as market manipulation in and of itself. But a lot of all these criticisms are missing the entire point. Because sure, a lot of people will probably lose their money on GameStop. But for a lot of those same people, they're not buying GameStop to make money. They're not buying it as a long-term investment for their retirement. They're buying it for what it represents. A movement against Wall Street, specifically a movement for full transparency and fair practice. I know it's one of the reasons why I bought into the stock and why I've held on to it ever since. It's not because I'm under some illusion that this stock will be worth thousands and end up making me millions. In fact, this stock will probably end up losing me a lot of money, or it'll maybe go to zero. But that's not why I bought the stock. I bought the stock because I like it and what it represents about the stock market and how it actually works. As long as short sellers continue to manipulate the market and hide their data, and as long as retail investors continue to pay attention, this will be a very interesting stock about what it exposes about the stock market and its practices that really need to be reformed. I'd love to hear your thoughts about what's happening. Do you like the stock and are you buying it? Let me know down in the comments below. I want to apologize for reposting a big portion of this video, but I wanted to re-explain and update exactly what's going on because it's an evolving story. But as always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below on my Patreon. Thank you so much for watching this video. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.